Well, what opportunities are still out there for the soybean industry as exports struggle a little bit in the absence of Chinese demand? Could renewed optimism in the biofuels industry drive demand growth? Helping to navigate these questions revolving around the U.S. and global soybean industry, we have Walter Cronin. He's the co-founder and president of White River Nutrition, a soybean processing facility. Walter, great to have you on and get your perspective.
Great. Yeah, we're just not one facility. We're a soybean processing company with two plants, one in Seymour, Indiana, and one in Creston, Iowa.
Yeah, I think I meant to say company too, but so yeah, t kind of tell us a little bit about your background as you're kind of a different voice for us as so not only your background, but also a little bit about White River Nutrition and kind of how that ties into the agricultural industry and U.S. soybean farmers.
Well, my background is in industrial agriculture and primarily in risk management associated with running assets. Most of my career has been in soy processing. 11 years in the corn ethanol business. Basically, we set out to form a company focused primarily on nutrition and the for the soy processing industry. 80% of what we do is produce animal feeds, and that's that is that is not apparent. And when we're, especially today, as we're going to talk some more about biofuels policy, because 20%, so 80% is feed, 20% is oil, and is soybean oil, and half of that goes into the feedstock for biomass-based diesels. So half of soybean oil production goes into biofuels, and so it's 10% of what we as an industry do, and it gets 100% of the headlines. And we sort of, as an industry, have to do a better job of allowing people to fully understand what we do, which is to produce the highest quality vegetable protein meal for the world to produce meat proteins. So we started down a path. My partner Gordon Glade and I to do greenfield development, and we were contacted by a company, Benson Hill, that owned two facilities that they wanted to sell, and so we moved very quickly to purchase the two facilities, and that's how we're in business today. And we do two things. We produce animal feeds, but we also produce products for the human food side as well. At our Creston, Iowa facility, we produce soy white flake, which is converted into soy protein concentrate and soy isolates, and we also mill soy white flakes into flours and grits as well. So that's a very dynamic market. Maybe we'll touch on as well.
Yeah, and it's funny that you brought up the headlines because yeah, I mean that's probably going to be that's where I want to kick things off too is that the soybean oil side is kind of what is gathering a lot of the headlines. It's been quite a uh, interesting last few weeks to kind of have a lot of the breaking news, it seems like. So let's kind of start with the EPA's RVOs. So last month, the EPA released its proposed renewable blending mandates for 2026, 2027. That came with substantial increases from 2026 with the biomass-based diesel side from this current year, and then making those additional increases for 2027. Kind of what was your reaction, industry reaction to that? Because it kind of seemed like that came in on the high side of expectations for getting some optimism for biofuels again.
Oh, it was a shock. It was a shock across the board to the industry, that the RVOs were set as high as they were, a 70% step up for 2026 and 2027. That's a massive change. And not only that, it came with a lot of hurdles for foreign feedstocks to qualify for participation in the biofuels programs in the U.S. So it was support on the volumetric increase of demands for blending, but also the restrictions that have been a challenge to us in the soy processing industry over the last year, due to the import of foreign feedstocks, primarily used cooking oil from China, which I'm saying used cooking oil with air quotes because not so certain it was used cooking oil, and that so that challenge that the industry is behind us for 2026 and 27. So it's an enormous demand increase for U.S. soybean oil to meet the domestic biomass based diesel production. But it was shock. To your point, I think you were making the point it caught the industry pleasantly. It was a pleasant surprise for the industry for sure.
Yeah, I mean, just looking at soybean oil prices that day, just really showed that, yeah, there's a big move in that and what expectations were. And you did
No,
mention, oh,
it was
go
a
ahead.
funny. The day speaks to the shock because when the numbers were published, the market sat for about a 10 to 12 minute period, um, as we were all in the industry texting each other saying, "Wait, did Bloomberg is that wrong? Did they get the numbers wrong? Is this story wrong?" So there
Mhm.
was a gut check that was occurring by a lot of participants for the first 10 minutes of trade, because the numbers were so large. It didn't make sense for a lot of people. And so then, as you said, then we finished that Friday limit up 3 cents per pound in soybean oil futures, and then the next day with expanded the exchange requiring expanded limits up 4.5 cents. So a 7.5 cent move on basically a 50 cent item, and gives you some perspective of the level of shock and that the industry received with that level of support, both from the EPA and the RVO, and then what we're going to talk about as well, I think in a minute, 45C and the tax credits as well.
Yeah, and again, you already alluded to it with the feedstock of, where are those feedstocks coming from that qualify for those credits? You mentioned that in the EPA's proposal, foreign-based feedstocks not really making the cut. And again, going to this one big beautiful bill that's currently being passed around. Went through the House, now went through the Senate, it's getting passed back to the House. It's looking like I would assume is that we're going to see that reduction or at least exclusion of biofuel tax credits for foreign-based feedstocks.
We're holding our breath. I mean, we'd love to see it signed by the 4th of July, which I think the Trump administration is promoting, but it's not really a done deal till it's a done deal. The another very pleasant surprise was the House version had ring fenced. I think the term that we were using in the industry, U.S. feedstocks. The Senate version early on, they sent up a trial balloon for reintroducing credits at a lower rate for foreign-based feedstocks, and then ultimately the Senate reconciled to the House's version, which was very supportive because we thought um, there might be some horse trading going on between the House and the Senate to allow foreign-based feedstocks to qualify. And as it stands right now, and as you said, we're waiting for finalization and the president to sign the bill. As it stands right now, the ring fence for American origin feedstocks is in place.
Yeah, and even going off of that too, just when you looked at the initial renewable diesel boom, we didn't have a lot of the foreign-based feedstocks coming into the US, so there was a lot of soybean oil that was going into that renewable diesel production specifically, where it was almost 50% of feedstock usage going into biofuel production. And now looking at that today, we're more along 30% with UCO accounting for more, beef tallow from Brazil counting for more. So I guess with the exclusion of the tax credits, would it be the anticipation or the expectation that we could maybe see those percentages of soybean oil being used creep a little higher?
Oh, necessarily is going to be the case. The policy is determined that way. There's as I think you're aware, there's a trade war sort of escalating with Canada right now. So
Mhm.
how Canadian canola will qualify, I think, is an open question in terms of the U.S. MCA agreements. Will canola Will canola, what will be the pathways basically for canola into into feedstock for biofuels? I think that's an open question right now, but it necessarily means that we uh, the biomass based diesel industry is going to have to revert to consumption of domestically produced feedstocks, and that's going to be soybean oil. And a lot of the issues around air quotes used cooking oil and some of the activity associated with that, which Biden's Treasury Department on its way out of town put out a note that they had concluded fraud was associated with that, that it was potentially not used cooking oil, but maybe virgin palm oil that had a used cooking oil blend, and stopped the process of allowing U.S. Road fuel producers to use the used cooking oil until a test could be determined to distinguish between blended used cooking oil, call it blended or true used cooking oil.
Yeah, for sure. And then, kind of pulling things back, relating it back to the farmer. Face value, I mean, this all seems really positive that we should see higher domestic usage for U.S. soybeans kind of moving forward. Kind of looking a little bit further out, once this bill passes, possibly with the exclusion of foreign-based feedstocks and those biofuel tax credits, kind of where are we sitting? I know the EPA's proposals also have to be finalized, but does this mean that we're just going to continue crushing more today, or is this kind of be a little bit more of a gradual flow as time goes on again?
Yeah, I'll answer that question this way. We have to accept, as in the American agricultural community, inclusive of our farmer customers who are growing soybeans for us, that we're losing the export game to Brazil. Brazil is just become so dominant in global trade in soybeans, and that genie is not going back in the bottle anytime soon, if ever. There's no way to prevent the Brazilians from expanding at the rates this year of 16 million metric tons in a single year in total production. I mean, it's just breathtaking how quickly they're growing total soybean production. And the U.S. is slowly but surely going to lose the export game to the Brazilians, and then slowly but surely continue to expand its total consumption of soybeans for domestic crush, and those products will flow primarily the oil for at least as the RVO envisions it, growing biofuel demand, and then on soybean meal domestic expansion, plus the U.S. becoming a global powerhouse in soybean meal exports, which historically that's been the role of Argentina. And so just as the Brazilians are changing trade flows on exports of soybeans, we will in the U.S. begin to change some of the trade flows in soybean meal to the advantage of the U.S. producer.
All right, so that led me exactly to the next thing I want to talk about is talking about that global competition on the US side of things. So as we're talking about that competition between Argentina, between Brazil, kind of talk about the global stage for the US of, are US exporters going to struggle to find a home for that soybean meal, as we are already kind of looking at lower prices that should kind of encourage that demand?
Yeah, demand's going to explode in globally. So the two major drivers moving forward in for soybean meal is first of all the two big ones that are always there. So I'll start with the two big ones. Is global population growth, right? There are going to be more people in the world tomorrow than there are today. And then number two, global GDP expanding. And so the demand pull for vegetable protein meals to produce produce meat, eggs, and fish is a very, very powerful dynamic. And as you said, we're driving prices lower relative to history, and we're going to allow more people in the world to have access to soybean meal because they'll be producing they'll be producing broilers and layers on their side of the globe and at an expanding rate because their margins will be good due to the pricing of soybean meal. So global demand already surprising on the upside this year. We're running, the USDA is forecasting 8% growth this year for U.S. soybean meal exports. We're running at closer to an 11% rate right now, and the U.S. is going to continue to grow with the globe in terms of total demand, and then we will be more competitive longer into our marketing cycle than we ever have been, just because of the growth in crush capacity that we have. So the summer seasonal period, which we're in right now, where the industry is taking plants down and doing annual maintenance and repair on facilities, which historically has meant much lower U.S. exports because of availability. As capacity expansion occurs, that won't be the case, and the U.S. will be able to remain competitive through a longer part of the marketing year than it ever has been. So I'm not in the camp of concern about mountains of soybean meal growing. That's never been the history of the U.S. industry. Look at any USDA projected carry out in soybean meal, and it's always minimal because we just don't build and store stocks of soybean meal. That hasn't been the history of the industry. It's a very disciplined industry, and when margins dictate that the industry should be slowing, the industry slows. It responds very, very rapidly to margins. So we're not going to overproduce, and we are going to have a tremendous demand pull moving forward. Because one thing that happens globally and in the long history of soybean meal consumption is there are step functions, and we never step back down. So the world steps up in total consumption, which it's going to be doing now with prices at the levels that they are today. And as prices recover or move higher into the future, the demand will not step down.
Yeah. And so you kind of mentioned like even though we have that increased competitiveness, there's still incentive to keep product moving to get a lot of these global customers too. And so when we're talking about, worries of higher global supplies potentially suppressing prices, I mean, there's still opportunities that crushers can bring in that demand for the U.S. soybean farmer to keep, not from us not getting oversupplied. Obviously, there might be some supply and demand corrections as there always is throughout history.
Yes, but the Chinese. So as most of the listeners know, we grow a crop soybeans every year, half for domestic consumption and half for export. And of that export half, we have one customer takes 60% of the half. So in essence, 30% of total soybean acreage and growth in the country is for one customer only, and that customer is very, very rapidly doing everything they can to originate their soybeans from Brazil instead of the U.S. And I think even if we have a period or we enter into some reconciliation with the Chinese, et cetera, in the long run, they're going to try to buy as many soybeans from Brazil at the expense of the U.S. And that's a lot of soybeans. So that's 30% of a year in, year out of 4 billion bushel crop. So that's 1.2 billion bushels at risk that we will not be shipping abroad to China. And the U.S. soy processing industry is going to step up and is stepping up already today in its capacity to take the largest percent share of that which the Chinese will not take. So I think the farmer will have a different customer moving forward. It won't be the local river terminal for export of soybeans to primarily China. It will be to the local soy processing plant.
Yeah, and so are we still seeing a lot of that investment really exuberance that we saw a few years back of these soybean processing facilities? I know there was a big ramp up during kind of that renewable diesel boom period, since kind of softened, but maybe that's starting to maybe garner a little bit more effect to bring in that extra crushing capacity as well.
Right. No, the expansion period ran into a wall at 60 miles an hour with the, I'm air quoting again, the used cooking oil scandal and the used cooking oil selection by the primarily by the renewable diesel industry to use as their feedstock instead of soybean oil. And that was a very difficult period from February of 2024 really until almost February 2025. Very difficult period for the U.S. soy processing industry, not because of a mountain of soybean meal, but because of we couldn't move oil, literally could not sell pounds of oil, and that process was a black swan event. It's gone away. Margins have normalized. We're not quite at the level that we were in 21, 22, early 23, the go-go years, because of the expansion of renewable diesel demand for our soybean oil. But we're trending that way. And if you look at the long curve on soy processing margins, further out the curve than the old crop period and the new crop period, into the next 2 years is much higher than it was than it's been. A lot of those contracts making new life of contract highs. So the market is seeing the demand for oil, and it realizes that the function of the market is to get our entire industry operating at the highest level of capacity possible. And that's going to be that the market signal to make that happen is much higher board and physical margins, and we're trending that way right now. So, to your question, does that then engender confidence of investors to start investing in plants again and continue with the expansion? I think so. I hope so. We have a number of projects ready to go. We've announced one at North Platte, Nebraska. So we would like to see investor confidence return to understand that the primary drivers of this industry, I'll repeat them because it's so important, is global population growth and global GDP expanding and people eating better. And when we talk about eating better, that means more consumption of protein. It's very simple. It's just 2 chickens a week instead of 1 globally. And that has a profound effect on demand for soybean meal. And that in the long run is what's going to necessarily require our industry to keep growing.
All right, I don't think I can ask another question that would really give me a better answer than that to kind of leave on or leave off on, unless you got really anything else to say, just in kind of terms of this industry in general has just been constantly changing just over this past decade of, where are the product markets going, where are the whole soybean product or whole soybean markets going? It just really hasn't been stagnant at all.
No, and we have a new driver. The one thing I would like to add in this interview before ending it is we have a new driver in the Make America Healthy Again movement, which is a very large social movement in the U.S. And the primary focus of that movement is protein consumption. And protein consumption in many forms, whether it's in meat, eggs, dairy, or in products like we produce at our Creston, Iowa plant, soy white flake, which then is transformed into soy protein concentrates and isolates, which are blended into smoothie drinks, et cetera, for people to meet their daily protein requirement. And the advent of GLP-1 drugs and the popularity of GLP-1 drugs are a tremendous driver for a massive revolution in the American diet, and that diet is based on protein. And that when we talk about that, when we talk about global growth for meat, for instance, we often think about places like Vietnam or Thailand or Egypt or Middle East, North African countries, et cetera, that are the source of global growth. The reality is that both Europe and the U.S. are starting to grow total consumption in meat dairy, and eggs that the make the total production of vegetable protein meals to meet that demand. You could almost project a period of time in the not too distant future that we could move to deficit and have to be growing soy processing capacity, not on a biofuels policy, but on a global protein demand driver.
Yeah, definitely nice to be able to think about that other side of the crush, not just the biofuels, which again get a lot of the headlines that everyone is talking about for the soybean industry in general. But given a lot of producers, a lot of things to talk about or think about here moving forward, and kind of seeing how this industry continues to develop here in the future. But again, that's Walter Cronin with White River Nutrition. Thank you again for having this conversation.
Welcome.